Welcome to the Specialist Trading Weekly Forex Review for the week ending April 8th, 2011. Now in today's presentation we're going to be covering a conservative Forex trading mode. This is the 50% rule. It's actually more of an option than a rule, but I'm going to go over it in detail so that you can apply this to your trading should you want to trade more conservatively. But before we begin, we ask that you please take a moment to view our disclaimer. I'm going to show you the performance results using this conservative mode of trading, but remember, we can in no way guarantee that any of these results will be repeated in the future. So please take a moment to view our disclaimer, and then we shall begin this week's Forex review. Okay, so we're going to be covering the 50% rule, and it's actually, as I said earlier, more of an option because remember, these are strategies, these are not systems. That's one thing that we really stress. A system is something where you have to follow the rules, you cannot vary from them, you cannot change them or edit them at all. They have to be followed the same way each and every time. A strategy is 70 to 75% rule based with 25 to 30% room left for discretion on your part. The reason why I trade strategies is because, as I've stated many times in webinars and in teaching and mentoring, I want you to become part of the process. You have to be involved in trading. When you trade systematically, or when you just rely on someone's signals, or when you rely too much on an outside source, you take yourself out of the game and thereby opening up yourself for losses. So I want you to be part of this process, and that's why I give you lots of options to apply, such as this Forex 50% option or rule. If you should decide to use this conservative mode of trading, then these are the rules you must follow. So what you want to do is you want to move your stop to unchanged, give or take 1 to 10 pips, once price has traveled half the distance to the exit level. So in other words, if you've bought whatever currency pair at point A and you know in advance that your exit target is point B, once you traverse half the distance, 50% of that distance between point A and B, we suggest you moving your stop to unchanged, or let's say 1 to 10 pips below. I personally like to move my stop 5 pips below the entry point if I'm long. If I'm short, I place it 5 pips above. This gives me a little room for slippage. We give you the option of anywhere in between 1 to 10 pips. Some students like to move it right to unchanged, right where the exact number where they entered. A lot of them like to use 10% all the way. So it's up to you. Now let's start out by looking at some of the signals that we present when they make themselves aware on a nightly basis, sometimes 2 to 3 times a week. And remember, we place these alerts, these signals on our website on the welcome page. So what you'll see is something such as this. Now on the night of April 3rd, which was actually Sunday coming into Monday, we gave you an attention alert here saying that Specialist Trading has issued a buy signal in the British pound. We want you to go along the currency pair if it trades at 1.6132 or higher. This is our confirmation method in effect here. If triggered, place your stop at 1.5971 and exit the position for a profit at 1.6292. Once again, remember that signals are for educational purposes only. Always invest wisely. The reason why we state this is because my goal is to teach you how to trade with the Specialist Edge. My goal is not to force feed you signals so that once again, you're taking yourself out of the process, you're taking yourself out of the game, and you're just relying on me to generate these signals and give them to you on a plate. I don't want to do that. I want you to learn how to spot them eventually in all of the different Forex currency pairs so that, without my aid, you'll be able to trade on your own. That's the edge I'm trying to instill in you. So these alerts that we provide for you are basically for you to learn. They're a learning process so you can understand and check your work against what we have. All right, so this is the British pound coming into the night of the signal, and that's one of the beautiful things about our strategies. When we give you an exit point, we basically give you all the points for you to enter your order prior to actually having the trade take place. As you see here, this is the British pound. We have your point of entry, we have your stop placement, and your point of exit. Now, not all of our strategies come with a predetermined exit. Sometimes you have to wait for a certain indicator to fluctuate and to change before it allows you to exit. But in this particular strategy, which is strategy number 5, we do give you our exit points in advance because that's the way the strategy works. So you know coming into the trade whether you want to take it or not, whether it's too large of a risk, whether you feel you can use your discretion after watching the currency pair, whether you think it may go up there or not, or whether you just want to paper trade. You know in advance where all these orders should be placed. So as you can see, coming into the third, this is where you would have placed your orders for the following day. And look what happened. 2 days later, it worked exactly to plan. We made a quick 160 pips simply by following the trend, what the market was telling us, not by the fact that we were looking at any news, not by the fact that we were following any TV commentators. We just simply listened to what the market was telling us, and it was giving us signals that it wanted to go higher. So we jumped in and made 160 quick pips in the British pound, roughly $1,600, just trading one lot. Now, what the rule states is that here's where we entered, roughly right here, and here's where we had an exit level. And once we get to this halfway distance here, or 50%, you have the option to move your stop, which is down here, to unchanged, or anywhere 1 to 10 pips below. Now in this particular example, we did with our trade, but we didn't have to worry because once the British pound started going higher, once it passed and exceeded the 50% level, it kept going in our direction. So we were never in any danger of being stopped out unchanged with a small loss. But that's the rule in effect. Remember, it's a rule only if you decide to take the option. Once you take the option, then you must move your stop up and follow the rules of that particular option. Now here's another example of a trade alert later on in the week on the 5th, the night of the 5th, which is Tuesday. We gave another signal, a warning our Forex members that a buy signal had been placed in the dollar-yen. So we want you to go long the currency pair if it trades at 84.87 or higher. Now if triggered, place your stop at 83.85 and exit the position for a profit at 85.71. Okay, so this is what we told you on the night of the 5th, which was Tuesday night going into the next day. All right, so here was the close of the market. So you know where you're going to be entering, you know where you're going to place your stop, and you know where you'll be exiting. Okay, so you enter your orders and simply have to watch every once in a while. You don't have to be monitoring every 5 minutes the way you're day trading. And so the minute you entered, things went our way. As you can see, we got long and the dollar-yen started going our direction. And guess what? We met the 50% level. Now, I personally am using this conservative mode of trading, so I always use the 50% level in all of my trading. Once again, this is where discretion comes in. If you do not want to use it, you do not have to. I personally do. So once I got long and once I saw that we had gone half the distance to the exit of the target level, I simply raised my stop to 84.82, which was 5 pips below my entry point. Now let's see what happened the very next day. Well, as you can see, we got stopped out for a 5 pip loss, which is basically about $58, $60. Nothing big. That's okay. We'll take the loss, and then as you can see later on what happened today, nothing much has happened. But here's where the discretion comes into play. A lot of our students say, you know what, Steve, I'm not interested in the conservative mode. I'd rather be more aggressive. So if you traded the conservative mode the way I did, you're stopped out of our dollar-yen trade. If you're trading more aggressively, well, you keep your stop at the initial stop level right here. You keep your open order as well here to exit, and you're still in the trade because nothing has happened. You're just basically treading water. So you're not stopped out because your stop is still down here and you have your exit target order here. So you're still in the trade. This is why we say these are not systems, because people can trade, two people can trade the same signal and have different results because of the different options we give you. So here's a perfect example of how the conservative mode would have stopped you out with a small 5 pip loss, or if you traded more aggressively, you are still in this trade. So we invite you to follow along. For you students who are paper trading, follow along next week to see what happens in the dollar-yen. And lastly, here's one more signal that we presented this week on the night of April 6th, Wednesday. Specialist trading issued a buy signal in the Australian dollar. So to go along the currency pair, if it trades at 1.0451 or higher, if triggered, place your stop at 1.0288 and exit the position for a profit at 1.0586. Remember, we're not spoon feeding you this so that you don't understand really what's going on and just simply and blindly enter your order. These signals are for educational purposes. So I want you to understand and see on your own that there's a signal, and then email me and say, Steve, I got different results, or I got different entry levels. Can you explain to me if am I doing something wrong? So we basically put these signals up for you to compare your work against, not once again to blindly issue you alerts. That's not the way to learn, and I know a number of online courses do that. We're doing this for educational purposes. Ultimately, I want you to leave the nest and learn how to do this without the aid of me issuing you any signals. All right, so let's look at the Australian dollar now. This is coming into the trade. Excuse me. Once again, here's where your entry point is at 04.52. We have your stop placed and your exit levels. You can enter all these orders prior to the trade taking place. It's that simple. So let's see what happened. Well, as you can see, the very next day we got long at 1.0452. This was actually, we had a little slippage here of a pip or two. All right, our stop is in place. We still have our exit in place, so nothing really has changed. We haven't gone up to the 50% level. Now today, being Friday, we actually got to that 50% level. So guess what I did trading the more conservative mode? Immediately when I saw we got to that level, I raised my stop to 1.0447. Okay, so that's where my stop is. Now, if the Australian dollar happens to fall out of bed, I will stand to have a minor loss in this trade. If it continues to go higher and doesn't head down any lower, well then I will exit at the designed exit target place. But I'm not going to worry about it because I'm pretty much covered. I'm either going to have a small loss, or I'm going to get stopped out with a small loss, or I'm going to exit with a nice gain. Now, if I'm trading this more aggressively, the way some other traders will, well then they keep their stop placement where it originally was set, down here at these levels. So you have an open order with a stop here, and you have your exit order here, both open orders. More conservative mode, you have an open order down here, stop level here, and your exit mode. All right, so let's recap. Now, for this total week, we actually had a total of 5 signal alerts. Okay, so we posted, I only showed you 3 right now, but we had a total of 5. Out of those 5 alerts, 4 were filled trades. So we got into actually 4 trades. Now, out of those 4 trades, the gain, pips gain or pips lost was actually 219 pips. Remember we told you about the 160 we made in the British pound, and we made some more on other trades. So trading one lot of the Forex, the large lot, you would have made over $2,200 this past week. Okay, and if you want to trade the mini lots, just divide that by 10, $221. So, you know, depending on how much capital you have and what size you're trading with lots, it's a nice consistency that we're trying to have. But what we're trying to show you is one of the ways to reach this consistency is you can decide either to trade more aggressively by keeping your stop at its original level, or to trade more conservatively. Either way, you're going to get different results, but one may suit you more than the other. You may get better results trading more aggressively, but your drawdowns will be larger, or vice versa, less results, but your drawdowns will be kept to a minimum if you trade conservatively. It's all up to you. That's why we want you to become part of the process and decide for yourself how to implement these strategies. The only way to do that is to go to the video learning section and pick one of them. We have upwards of 10 strategies. Pick one of them to really that fits your nature, and then paper trade it. Paper trade it for a while so that you really feel comfortable. Our edge here is consistency. We're not going for home runs. There may be some weeks where we'll have small minor losing weeks. Be that as it may, we're trying to get this 2 steps forward, 1 step back approach, this consistency in our P&L, rather than what so many traders have, and I'm sure many of you beginners have, where you're having phenomenal months followed by disastrous ones where you give away everything. We don't want that ever to happen here. Now, if you have any questions concerning what I went over today on the conservative mode of trading, or anything else on our website with the Forex course, please do not hesitate to email me at stephenprimo@specialisttrading.com. In closing, I asked you to take one last look at our disclaimer. I showed you the performance results from this past week using the conservative and the aggressive mode. But remember, we can in no way guarantee that any of these results will be repeated in the future. So as you're taking one last look at our disclaimer, thank you so much for joining us. If you have any questions, don't hesitate to email me. If not, have a great weekend. We'll see you next week. Bye-bye.